Let's talk about what stock I sold here today, why I sold that stock here today, and where I put the proceeds, that money, because I basically put this money in a few different stocks, including a brand new stock, and I'll tell you about what I'm kind of looking at there, okay? So the stock I sold here today was, unfortunately, Oatly. This ain't no jokely. So I held 18,000 shares in the public account in regards to Oatly, and it wasn't some huge position for me. Obviously, you can do the math on 18,000 shares at the stock price it is, right? And so it wasn't some type of like epic loss for me, but I didn't really want to take a L on this one, and we had to take an L on this one. Here's what's going on with Oatly. What made me sell this stock, okay? Well, it wasn't the revenue side. Revenue side was fine, although they did have shrinking revenues in Asia. At the end of the day, gross profit actually went up, okay. It didn't go up nearly as much as it should have, in my opinion, so it was good to see gross profit was up, but it should have been up actually much more. It should have been something with a 4 in front of it, easily, something in the 40 millions. But then they had selling general administrative actually increase almost $10 million year over year, which means the operating loss actually grew year over year, which means the net loss grew year over year. That's shocking, okay? There's no way this company's losses should be getting worse right now. This is one of those companies that quarter in, quarter out, we should see those losses cut down more and more and more. And so to see the company take an even bigger loss than they were taking at this time last year is nothing short of embarrassing. And I do not have time or patience for these companies that have already been, proving, they're not running their companies right, to continue to prove even worse and worse. I've learned, it's time to take the L while it's a much smaller L, move on. And that's exactly what I did here with Oatly. I mean, oat prices have come down immensely over the past year. Then to 2021 through the first half of 2022, oats were ridiculous, right? We had a super cycle in oats like we've never pretty much seen in history. And then, the oats are the second main product that goes in the product. It's water and oats, okay? Those are two main products. And so to see prices come down the way they are, to see transportation costs come down the way it has over the past year, and to see this company's loss get worse, makes me say management has no clue what they're doing here, okay? They were already on thin ice, but after this, it's just like, what are you guys doing? Like, how do you have a bigger loss than this time last year? There's no reason. When trucking rates were the rates they were at this time last year, when oats were the prices they were at this time last year, and you guys can't, no, okay, I'm not dealing with this anymore. At the end of the day, unfortunately for all these plant-based companies, which now I have $0 invested into plant-based food companies. And it's sad because I really rooted for this space. I really wanted to succeed. I think it would be great for the United States of America. I think it'd be great for the world. But unfortunately, because we do know there's a health epidemic that no one wants to talk about going on in the United States of America around diets, and I just thought a lot of these companies made people think differently about the way they're eating. But at the end of the day, unfortunately, these CEOs have no clue how to run a business, right? They think this is like, let's run a charity. Because if you look at the bottom lines of these companies, they run nonprofit charities. This is for-profit business, and this is a problem. If you want products to be successful in the food category, and we'll get into the stocks I bought here in just a moment, and the new stock I bought and things like that. But the bottom line is, if you want your products to be successful, food and drink-wise, you need spaces in companies to be successful there. There's a reason there's a whole aisle dedicated to soda, right? Because there's many successful companies that know how to run a damn business, like Coca-Cola and Pepsi and the other guys, okay? If you want the meat industry to be huge, you need a lot of successful players to build successful businesses around selling meat, okay? And it goes way outside of just a grocery store. It goes into all the fast food restaurants and McDonald's and Burger King and getting generations of people to eat certain ways, okay? Like, why is it we eat, a Big Mac and a large fry and a Coca-Cola? Why is that? Why is that one of the most popular meals in the United States of America? There's reasons for that, and there's companies that have been very successful in building that. But unfortunately, in the plant-based space, these people they don't know how to run a business. And so you have all these other, ways of doing business that they're very successful, and they run companies. This is a dog-eat-dog world. This is a dog-eat-dog world. And the ones that know how to run businesses will be the ones that dictate the whole game. And the ones that don't know how to make a dang profit are going to go to the wayside. And so unfortunately, it looks like all these plant-based food companies are going to be lucky if they even stay around within a year or two. And that sucks because that means that whole movement in what I thought was going to be a positive trajectory for the health of people is going to go right out the window. And we're just going to be back to the same old thing we've been doing, more unhealthy than ever before. Every year, obesity rates are going higher. Every year, we know people are having more and more health-related issues. And unfortunately, it doesn't seem like that's going to be fixed. And, there's several reasons for that. But at the end of the day, the ones that produce a lot of the most unhealthy food are the ones that are all making the biggest profits because they know how to run a damn business. And unfortunately, these other folks that want to change the world for the better, they don't know how to run a business. They're running charities out here and they're going to be eliminated. And that sucks, man. So it is what it is. The world's not always going to be what you want it to be. That's all I'll say about that, okay? Now, balance sheet wise, right? This is very exciting. So this is just in a 6-month period. This looks at December 31st, 2022 versus obviously this most recent quarter. And the cash and cash equivalents has doubled for the company. They went from $14.6 billion to $28.7 cash and cash equivalents. It's in a 6-month span. They doubled their cash balance. That's incredibly impressive. Total stockholder equity has gone up almost $10 billion in the past 6 months, right? $125 billion stockholder equity at the end of 2022. And now, halfway through the year, we're sitting at $134 billion of stockholder equity. That's extremely impressive. Now, something I think is very important to remember here in the Meta story is if you're going to speak negative about Meta, people say, oh, Zuckerberg, he's still spending so much on the metaverse, man. So much on the metaverse. And they're taking these massive losses. It's true, they're taking massive losses on the metaverse still, right? But it's very important. Quest 3 is going to hit this fall at some point. Does it hit October, November? We'll see. My guess is, especially with the hype around what Apple's done for the space, right? And the fact that you can't get Apple's product anytime soon, and that's going to be unrealistic price points, the Quest 3 should put up some pretty insane numbers. Now, once they get actually to selling these products, right, and then people sign up for the monthly plans that I think are $8 a month or something like that, the losses are going to start cutting down. And they're going to cut down in a pretty substantial way starting in Q4, but really you're going to see that reflected in 2024 in general. So a lot of people think they're just going to have these losses forever, and they're kind of modeling in a lot of that, when I see 2023 is kind of peak loss year, in my opinion, in regards to the metaverse whole situation. And I think in 24 moving forward, you're going to see actually much improved profitability there. That does not mean they're going to make profits on this, let's call it, area yet, okay? But nonetheless, you're going to see those losses cut down in 2024 and moving in future years, okay? You heard a lot about this yesterday, and so I want to look into this a little bit because everybody was talking about the Dow. Oh my gosh, it's the first time the Dow Jones was up 13 days in a row since 1987. You got to be flipping my flapjacks, okay? First off, I don't want to hear 1987 anything, okay? Because if you know anything about 1987, you know the worst day in pretty much stock market history was in what year? 1987. So I don't want to hear anything about 1987, but maybe I do, because there's a little sick side of me that would love to be buying on a day like what happened there in 1987. But, I read that and I said, dang, is the Dow really that hot? I'm like, I don't remember the Dow being that hot, to be honest. And so I looked into this a little more and I said, let me compare the Dow versus S&P 500 versus the NASDAQ versus a Russell so far this year, okay? And here's what we find. The NASDAQ's up 36%, and this was as of last night, okay? The NASDAQ's up 36%. The S&P 500's up 19%. The Russell's up 13%. The Dow's up 7%, okay? The Dow really hasn't been doing anything. It has 13 days in a row that it was up, and it was finally broke that streak. It couldn't make it to 14 days here today. But the bottom line is the Dow is not hot. Okay, the Dow's anything but hot. It's been, compared to the other indexes, a major lagger this year, which is exactly what I called out would happen, right? The bottom line was if the market was going to have a big down year this year, the Dow was going to go down far more than any of the other indexes. And if we had an up year, the Dow was going to be the lagger of the bunch. And exactly what I thought was going to play out has played out in the market this year, okay? So that's what's going on as far as that goes, right?